It was the news that took the Bitcoin markets by storm. PayPal's announcement that it would start supporting cryptocurrency started up that FOMO engine and put it into overdrive. Hopium dealers started throwing out their crazy price predictions as the mainstream media ran headline after headline. It was no doubt an exciting week even for Bitcoin. But was this overblown? Is it as monumental as they were making it out to be? Well, no, not really. But there are a lot of other things that are going on that are much more fundamental. Just focusing on this PayPal announcement is losing sight of the forest for the trees. This is Guy, your crypto guy, and in this video I am going to be giving you some info that you should really be focusing on. Some developments that are a proper bellwether for what we could see in 2021. And if you stick around till the end, I'll let you know how I am adjusting my portfolio to reflect it. Just before we get ahead of ourselves, some housekeeping. Guy is a jack of all trades, but one thing I am not is a financial advisor. This therefore means that I am most definitely not qualified to give financial advice. So please consult your financial advisor before making moves in the crypto space. I also now want to take the time to welcome all of those new to the Bureau. Glad to be gracing your screens. I make videos like this almost daily, and I cover a wide range of crypto subjects. If you want your finger on the pulse of the markets, then grab your ticket by smashing that subscribe button and pinging that ringing bell. Do that and there is no fear of missing out. And finally, I really value your time. So I've provided all of these handy timestamps right over here. Feel free to jump around to the sections that interest you. I won't be offended. Okay, that's enough pitter-patter. Let's get on to what matters. Firstly, let's address that PayPal news. Unless you had no access to the internet last week, you'll have heard the news that it was starting to accept cryptocurrencies. It would be allowing its 324 million users to not only accept cryptocurrencies as payment, but also buy crypto in their accounts. This was even more surprising given the fact that only just last year, the CEO of PayPal was poo-pooing cryptocurrency with his buddies over at the World Economic Forum. This news started the hype engine, and numerous established media outlets covered it. This had the predictable effect of instilling a lot of bullish sentiment among market participants. Numerous figures in the crypto space were jumping on the bull and riding it as much as they could. Of course, this excitement had an impact on the price. We broke through the 12K and even went through 13K. In fact, we'd not seen Bitcoin above 13K since June of last year. So it was no doubt some exciting times for all of us in the crypto markets. As the initial excitement started to wear off, people decided to read the fine print from the offer, and there were a few points that threw some cold water on it. Firstly, it's important to note that unlike nearly all crypto exchanges, PayPal does not allow you to withdraw your crypto to your own wallet. This means that there is no option for you to custody your own crypto. Secondly, you also have no option to send cryptocurrency to another PayPal user. So basically, all PayPal is allowing you to really do is hold crypto as an investment that you cannot move anywhere else. And even if you did want to use PayPal to buy Bitcoin, have a look at these fees over here. Not only do you have to pay these fees, but you also have to pay the spread. These fees are even worse than Coinbase, which says a lot. No offense, guys. So, in the end, this PayPal crypto offer is a bit of a damp squib from a usability aspect. There is really no reason as to why anyone would want to use the PayPal service over a normal crypto exchange. Yes, they have 324 million users, but let's be honest with ourselves, most of those users will have quick and easy access to a full crypto exchange of some sort. Setting up and using a Coinbase or Binance account these days is pretty damn easy, so there's no advantage from a usability point of view. Now, I don't mean to be a Debbie Downer, as I know that we all love us some adoption and hopium of a morning. But just because the actual service offered by PayPal ain't all that amazing, doesn't mean that the move itself is not an exciting one. It's a signal to all of those companies and financial institutions that offering Bitcoin-related services is okay. It's no longer viewed through the skeptical lens companies have used since it appeared on the scene. And of course, it's not just PayPal that is making headlines in the space. If you watch my recent video on corporate crypto adoption, you'll see that the trend is strong. You can watch that over here, by the way. I should also mention that not long after PayPal announced that they were going to be offering crypto, news broke that they were looking to acquire some crypto businesses, including the likes of BitGo. Now that would no doubt be a massive purchase, if you ask me. But for me, all of this news is just the tip of the iceberg. The adoption that we should be focused on is that coming from institutional investors. Those that have been quietly accumulating Bitcoin all year, hoping that you wouldn't notice. After all, lower prices mean lower entries for them. Now, I'm sure that you folks have no doubt heard of Grayscale. This is a well-established crypto asset manager that operates a number of cryptocurrency trusts. For those that don't know, trusts are investment vehicles that are registered with the SEC and allow institutional investors to gain exposure to an underlying asset. Grayscale's two biggest trusts are, of course, Ethereum and Bitcoin, with the latter having over $6 billion AUM. Now, that's a large number. In fact, if we take a look at this handy website over here that ranks companies that hold Bitcoin, it is the largest. But the actual number itself is of less interest than how quickly that number has grown. The last quarter saw the most growth of any quarter on record. If we pull up the Grayscale Q3 report, you can see that over $1 billion flowed into the fund over the period. Not only that, but this was the third consecutive record-breaking quarter. Every quarter of 2020 has been a record-breaking one, and year-to-date inflows have stood at over $2.4 billion. So, what is the investor profile here? Well, over 80% of these came from institutions, and the bulk of these were from hedge funds. You also had a large uptick in the amount coming from family offices. What sort of investment funds are we talking here? Well, thankfully, many of these guys have to report their holdings of Grayscale shares to the SEC. So we can get an idea of who is buying these GBTC shares. You can either search through the reams of filings on the SEC website, or you can use this handy financial reporting website over here. Here is a breakdown of some of the largest US funds that hold the Grayscale shares. You can also take a deeper look into all of these funds, and you'll see that most of them are not general hedge funds, i.e. not crypto-specific. Heck, you even have the Rothschilds over there. These funds are also not by any means small. If we take a look into their broader assets under management, ARK Investments has over $9 billion, Kinetics has over $3 billion, and Boston Private Wealth has almost $15 billion. Therefore, could these relatively small Grayscale, and by extension Bitcoin, allocations be them just testing the waters? You don't think that once the PMs at these funds sit down to discuss quarterly performance, they won't take notice of how well their Bitcoin allocation has done, and allocate more of their portfolio to it accordingly? I happen to think so. And therefore, I'll be keeping a close eye on those Q3 SEC reports. I wouldn't be surprised if a lot of these guys have been allocating more funds here. Now, of course, this analysis is only for Grayscale funds. I'm pretty certain that there are a hell of a lot of other global hedge funds and institutional money men that hold physical crypto, perhaps through a custody of some sort. Is there some way for us to get an idea of this? Well, thankfully, there is quite a bit of survey data out there. Earlier this year, Fidelity Digital Investments conducted a survey of 774 institutional investors split between the US and Europe. The survey spanned a variety of investor segments, including high net worth individuals, financial advisors, family offices, hedge funds, endowments, and foundations. Here are some of the most salient points for me. Over 36% of the respondents currently invest in digital assets. Over 80% find something appealing about digital assets. And 60% of the investors said that they feel digital assets have a place in their portfolios. These are some really illuminating statistics. One could never have imagined such a rosy picture for institutional crypto perceptions only a year ago. This is a relatively strong sample of the entire institutional investor universe. Can you just imagine how much institutional investor money could be waiting at the gates if 6 out of 10 of these money men think it has a place in their portfolio? Even if it's a small sliver of their allocations, we're theoretically talking hundreds of billions. And there is an even more encouraging sign than this from the survey. Of those 36% of the respondents that said that they do hold crypto in some form, 59% of them said it was through a direct purchase. Unlike with purchases of Grayscale shares, physical Bitcoin purchases do not carry obligatory reporting requirements. This means that there have been a lot of institutional players that have been stacking sats over the past year. And you would be surprised as to how much could have been slowly accumulated without anyone really knowing it. They could have used a combination of an advanced TWAP execution method in the open market or large-scale block OTC trades to pick up those Bitcoin. These guys could literally have stacked hundreds of millions of sats and not even moved the price a bit. Case in point, that MicroStrategy Bitcoin purchase used a TWAP method over a number of days. It allowed them to accumulate close to $500 million in Bitcoin without even moving the needle. It was only after they disclosed their purchase that the price moved. So what am I trying to get at? Well, a wide range of institutional investors are buying up Bitcoin. This is most likely something that many people have not really noticed because of how efficiently they are smoothing in the execution. Moreover, as per the survey, there is an even greater proportion of investors that are seriously considering adding digital assets to their portfolios in the foreseeable future. A pretty bullish sign, if you ask me. Now, this was just one survey. What would be great is if there was further info that backed up these results. Well, there sure is. Just a few days ago, you had Cointelegraph Consulting release a survey that they conducted with a host of other companies. Titled Discovering Institutional Demand for Digital Assets, this report surveyed 55 portfolio managers in Europe who collectively have about 718 billion euros under management. So, out of these portfolio managers, 36% of them already had digital assets of some form in their portfolio. If that number seems familiar to you, then it should be. It's exactly the same proportion of respondents in the Fidelity report I just went through. Not often you see that. This shows that the two surveys pretty well mirror each other. It shows that in the universe of institutional investors out there, you have a pretty good idea of how many of them have allocated to crypto. I encourage you to read both reports as they go into the institutional markets much more in depth. They're linked to below. Okay, so we now have reasonably good survey data that demonstrates a groundswell of institutional demand for hodling Bitcoin. So that's all pretty convincing. But I'm the kind of guy that likes to see as much data as possible to back up my claims. Something else that we can look at is some on-chain data. The Bitcoin blockchain is, after all, fully transparent. What we can do is take a look at the number of individual whale addresses. These are those addresses that have over 1,000 Bitcoin stored in them, about $13 million at the time of shooting this video. As you can see over here, there has been a sustained increase in the number of these addresses over the past few months. This has recently spiked above 2,200 unique addresses. So the broader trend appears to show that wealthy addresses are accumulating. Now, of course, I should caveat that there are probably other market participants captured in these addresses. Some of them may be high net worth individuals, crypto businesses, or crypto OGs stacking more coin. Moreover, if a large institution is buying through a trust or storing their funds at an institutional custodian, they'll not be adding to this number over here. I'm actually of the view that this is the case with a lot of those really large hedge funds and mutual funds that I mentioned before. They have a fiduciary duty to make sure that they are storing their Bitcoin with a well-known and rock-solid custodian. Coinbase, Gemini, BitGo, etc. Now, there is just one more on-chain metric that I want to show you to further illustrate the point that sats are being stacked. This is through this exchange balance over here. As you can see, the amount of Bitcoin that's being held on the exchanges has been on a precipitous decline over the past few months. This can only illustrate that those that are using the exchange are moving them off. This usually shows that investors are keen to hodl the Bitcoin and are not looking to sell in the near term. Yes, retail investors also use exchanges, but you can be pretty sure that the sheer amount of Bitcoin being bought by institutions outweighs that of your average retail hodler. Oh, and of course, this exchange balance number also excludes some of those institutions that may have been buying their coins through block purchase on the OTC market. So, all of this information shows that there is no doubt a groundswell of institutional demand for physical Bitcoin. Bitcoin for them to store and to allocate to the alternatives bucket of their portfolios. But this only looks at the physical Bitcoin markets. We can also get a sense of institutional demand to trade and hedge Bitcoin risk by looking at the derivatives market. So, let's do that, shall we? There are, of course, a number of different exchanges where market participants can trade futures and options. These include the likes of OKX, BitMEX, Binance, FTX, etc., etc. Most of these exchanges cater to both retail and institutional investors, so it's hard to read any particular trends from growth there. However, there is one derivative exchange that's almost predominantly occupied by institutional traders, and that is the CME. The Chicago Mercantile Exchange listed Bitcoin futures back in 2017. However, it was not until about April of this year that we saw open interest on the CME skyrocket. For those that don't know, open interest is a measure of the total outstanding notional value of the futures contracts. So, if there are a lot of contracts out there, then the open interest will be high. Over at the CME, this open interest is now at all-time highs. This shows that those institutional investors are entering ever larger Bitcoin contracts. Moreover, the CME open interest has now overtaken a number of the more established derivative exchanges. These include the likes of Binance, BitMEX, Huobi, etc. I'm also of the view that this is likely to overtake OKX pretty soon, for obvious reasons. Oh, and this is just those futures instruments. I should also point out that at the beginning of this year, the CME also started offering Bitcoin options. As you can see here, the open interest on these has also increased dramatically. The CME open interest now only lags behind Deribit and has surpassed all of the other exchanges. So it's clear that there is a trend in this CME data. But, as is the case above, it does help to have some more data to back up these claims. Well, one more exchange that we can actually look at is Bakkt. Now, this is a much smaller Bitcoin exchange that's operated by the Intercontinental Exchange, same folks who own the New York Stock Exchange. The trader profile at Bakkt is pretty similar to that of the CME. It's more than likely large institutional clients, hedge funds, family offices, mutual funds, etc. Moreover, Bakkt is unique in that its futures instruments are currently the only ones on the market that will settle in physical Bitcoin. In other words, most other crypto exchanges are cash settled. They mark to market the profit or loss on the time of expiry and adjust your balance. This is exactly how the CME operates, for example. Anyways, over at Bakkt, we've seen a pretty strong trend in Bitcoin delivery recently. Arcane Research has mapped the trend over here. We went from a mere 50 Bitcoin being delivered back in July to a record 400 being delivered here in October. This beats the previous month, which saw close to 350 Bitcoin being delivered. So, this confirms the trend that we're seeing over at the CME. Yes, the actual amount is minuscule, but its growth is interesting. Indeed, 2 months ago, the president of BACT claimed that the increasing volume it was seeing for its futures instruments was being driven by these institutions. Now, we know that institutions are not only scooping up sats, but they're also increasingly involved in the crypto derivatives markets. I think I've made my case here, folks, but of course, I want to leave you with some final thoughts on it all. There's no doubt that institutional adoption is upon us. It's no longer just a mantra that we throw out in the hope that it sticks. For every single headline where you hear about some asset manager or banker touting Bitcoin, there are many, many more that are speaking with their money. Call them the silent majority, if you will. While Paul Tudor-Jones, for instance, is happy to disclose his Bitcoin thesis, this lot would rather keep mum on the topic. Why drive the price up when you're still trying to pick up cheap Bitcoin? Whether it be through regulated investment vehicles like Grayscale, or bought on the open market through exchanges and OTC dealers, the data shows that Bitcoin is being accumulated. Heck, these institutional investors have said as much in the 2 surveys that I covered. If those surveyed really are picking up crypto in the amounts that they say, then you know that the on-chain data is undercounting. The Grayscale inflows are a microcosm, and the futures data is the tip of a monumental institutional iceberg. And we must, of course, not forget about what's going on in the corporate space. As you may have seen in my video last week, there is an ocean of cash on corporate balance sheets. Cash that is earning nothing and is ripe for Bitcoin allocation. So, if you add these 2 together, it's no wonder that we've seen Bitcoin hitting fresh yearly highs. And I would not be surprised if this was just the beginning. Well, I hope my tiny dose of Hopium has powered up your dopium. In terms of what I'm personally doing, I will of course be increasing my long exposure, mostly by purchasing some call options. For those of you who follow my weekly email, you'll know that I currently hold a number of December call options, which I bought back in August. So I will be adding to that. I will let you good people know exactly how and when I buy these options in my upcoming newsletter. Oh, and if you've no idea what this is, it's my once weekly take on everything crypto. Markets, projects, reviews, the works. It's also where I share a breakdown of my personal portfolio. So, if you want to be a part of that, hit the first link in the description below. Once you've confirmed your subscription, you are good to go. And that's it, team. Thank you so much for watching. But I need your feedback, of course. So, what do you think of my analysis? And does anyone out there want to venture a Bitcoin price prediction for the end of the year? Fire your comments below. And if you found this crypto guy helpful, then help a brother out. Make that like button blue and smash that subscribe. I've got a lot more Bitcoin analysis just waiting to hit the tube.